What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock, what you should be looking after for the future. I'm also going to do some in-depth technical analysis and give you guys my price prediction for tomorrow based off what the charts are showing and based off what the data is suggesting. I'm also going to talk about the FOMC meeting, why this is going to be very important for the markets and how this may affect Tesla. I'm also going to talk about the mortgages right now, how demand is kind of shifting in the markets, and how this will affect our economy, business profits, unemployment, and so on and so forth, which in turn will affect Tesla going forward. And before I break anything down about all this data, before I talk about how this may affect the share price for tomorrow and the near-term future, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. And not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo with the link down below and deposit $100 into the account, you're guaranteed 10 free stocks, each worth up to $2,500. And you could always sell these 10 free stocks for cash and use that cash to buy some Tesla shares for free. This is a limited time offer. It ends in just 7 days, so check it out before they run out. With that out of the way, let's get on with the video. So Tesla was up about 0.2% on Friday. It's a little bit red in the after hours, which is just normal. I mean, I wouldn't pay too much attention to that typically, but this could actually be an indication of a future drop we're probably going to see. Now, I'm not just going to talk about the after hours. It's not just about the volume that we saw that kind of decreased on that day, but it's also because of something very important. That's the FOMC meeting. For those who don't know, it's going to take place on the 26th through the 27th of July. And the 27th, which is this Wednesday, is going to be the most important date because this is when the Fed is going to announce their changes to open market operations and to what degree they're going to raise the federal funds rates, which will raise interest rates and mortgages and so on and so forth. So looking right here, specifically on the 27th, this is going to be the most important time. It's going to be at 2 o'clock p.m. Eastern time. This is the 2-day meeting. The first one's on the 26th, which is probably going to be a pre-recorded message. It probably won't be too bad because Jerome Powell has a tendency of not, trying really hard to tank the markets. He tries to keep it afloat as much as he can. And in addition to that, we could see on the 27th, that's going to be the much bigger day at 2 p.m. Eastern time. So the markets right now are pricing in a 75 basis point hike. We could see it's almost priced in. In fact, it already is priced in, but we're also in part kind of pricing in that 100 basis point hike as well. Now, the truth is, even though we're most likely going to see 75 basis points, it's not 100% certain just yet. And because there is some uncertainty, and because of how the market has responded on a historical basis, we are probably going to drop going into the meeting. And specifically, the Mondays have historically been the worst days. So that's typically when we see the big drop that happens. Now, that doesn't mean every day has to be red for next week, but I do anticipate some downside for Monday due to uncertainty and how on earth the market responds to these meetings approaching. Because 100 basis points is very unlikely, but it's not 100% off the table just yet. If you look at what other people are talking about, that's the fact that many people have talked about how the soft landing is very unlikely, and we are going to see a bit of an effect on jobs and our economy due to the changes the Fed has to make to address inflation and so on and so forth. So if we actually look at something that's going on as a result of this, just to make this really quick, mortgage demands have been dropping. We're at a 22-year low as interest rates are just going up, and inflation is kind of crushing a lot of home buyers, and this in turn is really having an effect on the consumer side. So what's essentially happening is the consumers, the spenders, right? Their demand is going down. This in turn may end up causing a lot of a drop in earnings per share, for instance, or profits for businesses. And when that happens, this tends to actually lead businesses to laying off employees. And we're starting to see some signs of that happening. Now, this is just what happens during this business cycle disruptions known as recessions and other things like that. So it's something important to note. I wish the best for everyone during these hard times as inflation is still high. And on top of that, we're seeing the 30-year fixed rate mortgage averages in the USA going up, and we're reaching the highs we've seen for years. And I do anticipate them to continue to go up going forward as the Fed is going to continue to raise the federal funds rate. So that is something to really keep in mind. This kind of drop in the demand side It's not the best in terms of keeping the markets afloat, but it will be great for the long term, right? We need to see these drops so that the market recovers in the long term, so that our economy kind of flourishes and gets cleansed during these hard times. And it's something we basically need. So as a result of all these changes, if we look at SPY real quick, let me actually pull up the SPY. Look at what the SPY did going into the last FOMC meeting. And let me actually double check the dates just to be clear. 14th through the 15th was that FOMC meeting. And you guys could see what happened as we approached that date. On the 9th, the SPY took a big hit. The 10th came, another hit. The 13th, finally, big hit. I think that was the Monday. Then the 14th and then 15th, we saw the markets kind of trading right here. So where this line is, this was the day that Jerome Powell announced the rate hike. We can see the market had a big hit followed by a nice, kind of relief rally temporarily after that, right? That's typically what happens. But you guys could see this big dump that came. And recently we didn't see this big dump yet. It hasn't started yet. But if we actually look at when the time started, it was like right here, the 13th, which was that Monday, I believe. This is when we saw a bit of a hit from the markets. This was the biggest hit we got for that week. And it does look like we're probably going to see a repeat of that most likely, because this is generally what the Fed ends up doing. And if we look at SPY specifically, you'll notice that we got a rejection off 400. Once we touch 400, we got a big rejection. We're starting to drop from here. So I do think downside is a lot more likely than upside. Now, from Tesla's perspective, it's pretty obvious what's happening right here. Tesla pushed up to $842 a share. Then it got a rejection off that, and now it's kind of hovering in this kind of range right here. And it's looking like it's going to be testing those $800 level of support zones many, many times going into tomorrow, maybe early days of the upcoming week. And I do expect that to happen. And I don't expect 800 to hold. In my opinion, it looks like it's going to have a bit of a drop. We haven't been in the 800s for that long. So we're kind of in this, like, how should I say, short-term new territory. Tesla was in the 800s a while back, but we haven't been there for quite a bit of time. If I zoom out of the charts, it's been a while. So seeing, moves like this being made, it's very likely that we're not going to hold these levels for too long. And also, like I mentioned before, we have this big gap right over here. This gap right here is an indication that Tesla may take a hit relatively soon. That is what historically happens after the earnings. Typically, what happens during earnings, if they're just decent or even pretty good, Tesla has a big push to the upside, then a big drop afterwards. And that's what I anticipate happening to Tesla. So what I first want to do is talk about support and resistance zones, and then I'm going to transition into what I predict is going to happen. So just to make this clear, if Tesla magically pushes up, okay, Tesla's going to have resistance at $830 a share. And if we actually break that, then around the 840 range, that's where the next key resistance level will be. Now, it's very unlikely we actually break past 840 with everything going on. So the next key zone, if we somehow magically break that, which is extremely unlikely, 858 is a very key zone. This is where we have a gap, but I don't see that getting filled just yet. I think it's going to take much longer. Now, we're most likely going to drop, so look out for 800 support. I don't think that's going to hold us tomorrow and for the next few days. I think this thing is going to come all the way down to that 776 range, maybe test this zone for a little bit of time, maybe between 780 to 776, and then we're going to get another rejection soon, and I think we're going to fill this gap and come all the way back down to that 730 range relatively soon, within the next couple of days, maybe sometime in the upcoming week. I just think that's a lot more likely given the market circumstances and everything that's going on with the Fed. Not to mention we have the GDP report coming out, then PCE data on Friday, so a lot of big things are coming out for the week. And just to remind you, let me just go over this one last time. The 27th, all right, we have the FOMC meeting. The 28th, we have the GDP report. If it's negative, that's going to be the key indication that confirms that we are in a recession. And the 29th of July is the PCE report, which is the CPI for the Fed, basically. So big week is coming ahead of us, and I just anticipate some downside for at least the first half. So Monday and Tuesday, I'm pretty bearish. Wednesday, I think, should be a little bit of an improvement, and then Thursday and Friday do depend on data, in my opinion. So with that said, what do I think is going to happen to Tesla for tomorrow? Let me actually draw this out for you. Let me just zoom into my chart because everything's kind of funky right now. Let's make this look a little better. So going into tomorrow, what typically happens to the markets is we get a bit of a push into open, kind of like this, and then we drop afterwards. But I'm finding that pretty unlikely. Even if we do get a bit of a push like this, I think we're most likely just going to get dumped tomorrow. And I do think that Tesla's going to be trading in this 800 zone for some time. It's going to be trying to get those bounces, and then it's going to probably break below that and go as low as 776 or even lower than that, maybe around 780. We should actually hold around this range, in my opinion. It really depends on how bloody things get. If not, we could drop as low as that 750 range. But I'm not going to predict that for this. I would like to be a little bit more on the optimistic side. I would like to see Tesla hold. It could end up kind of dropping like this for almost the entire day, maybe close around 760, somewhere down here. So I am anticipating a very red day for tomorrow and the upcoming days, in my opinion. And in my opinion as well, I do anticipate this gap to get filled relatively soon. So I do think Tesla's going to come down to that 740, 730 range down here. We actually have some support in this zone, so I do think Tesla's going to trade here temporarily. But just note something, all right? It doesn't matter if Tesla drops like this. If it drops, that's completely fine. That's healthy. And in addition to that, it's not the end of the world because the whole market is probably going to drop, in my opinion, due to FOMC. And once the rate hike is announced, we're probably going to get a 75 basis point hike. It's very likely that on Wednesday we could actually have a green day. And maybe even if we do have a negative GDP quarter, I'm not 100% sure how the market would respond to that. It is possible we get some red for Thursday, but Friday, maybe going into the next week, we could actually see some relief after that. Tesla should make better moves, but this week has so many big announcements, it's very unpredictable. So I'm kind of anticipating a bit of a downside start to this week. That's what I'm seeing right here. But I think by the time we get to Friday of this week, things should improve because PCE should be a lot better than the last time we had it from last month. So that's essentially what I'm seeing for the markets. So just to summarize, I do think that Monday, maybe even parts of Tuesday, are going to be pretty red days. Wednesday should be a little bit better. Thursday may not be that great because of GDP. And then Friday should be a better day for the markets because I think the PCE report is going to be a lot better than some people would think due to the fact that gas prices have actually started to go down a bit and other sectors of inflation have actually started to cool off as well. So I know PCE doesn't weigh in energy that much, but other sectors will. Anyways, this is essentially what I'm predicting, guys. I want you to be prepared for this. I went over support and resistance levels. So my predictions are not always going to be correct or perfect. Please also look at the other, pieces of analysis I did in this video. It's not just a prediction. It's also looking at what the Fed is doing. So be prepared for some moves like this. I think downside is a lot more probable than upside. And I do think this thing is going to come kind of like crashing down. It's just my honest opinion. And if that isn't the case, watch for these support and resistance levels. I pointed everything out. I made this as clear as possible. With that said and done, thank you for listening. The last thing to look at is what our few technical indicators are showing. If I pull up like the daily candles, we can see right here, we are showing some upside, but it does look like we might get a MACD signal line crossover to the downside. As far as the RSI goes, they're not really showing it just yet. RSI did actually start to cool off a little bit on Friday. Let me actually show you the 2 hour candles. Right here, we're starting to see that curl right here. RSI is cooling off a bit. So it does look like we are anticipating some potential downside. Anyways, thank you for listening. Please enjoy the rest of your weekend. I wish each and every one of you the best, and I will most definitely see you guys in the next one. Tesla to the moon because the future is still very bright, and peace out.